Look, I'm not sure institutionally who should enforce the compliance, but certainly what you do need is to change the incentives of the individual governments. And we discussed the moral hazard problem. You tend to kind of live beyond your means because you don't get punished by the financial markets. So certainly what we need is clear, transparent, enforceable rules on fiscal policy. And obviously the Maastricht criteria have tried to do that, the Growth and Stability Pact tried to do that, but they were not enforced. And the question for debate is how really do we enforce those? And what I'm saying is, you know, obviously the most common fiscal criteria are things like a balanced budget over the long term. I mean, clearly, you know, this is something that's desirable, but again, you have to not only think about the current situation, you have to think about the future projections. And you might be surprised, but the problems that Europe is facing now is nothing compared to what's waiting in the pipeline. And this is not just a case of Europe, it's the case of the US, to some extent even Australia. Because the populations, because of the demographic trend and the aging populations, the baby boomers retiring, if you look at over the next 57 years, the projections in terms of future spending, fiscal policy spending on things like healthcare and pensions, and compare them to the projections of tax revenue, which is obviously fewer young people are going to generate fewer revenue. There's these scissors that kind of open up, and what's called fiscal gap, the difference between them is estimated to be, even for the US, in the order of 500% of GDP. In fact, not much lower for Australia. So the situation is you know, that really puts it in perspective and implies that we need strong reforms. The austerity measures that are trying to be implemented in many countries are clearly not going to be sufficient if you take into account what's looming on the horizon. And again, how do we enforce it? There's an interesting proposal for Australia now by Robert Carling and Stephen Kushner, where basically they want to implement fiscal rules and make them a part of the legislation, have an independent fiscal commission that would make sure these rules are enforced. And one of the proposals is that we need to set the right incentives, is that the politicians will be personally liable in terms of their pay for delivering the targets. So suppose you have a certain target balanced budget, and if you go into a deficit over a certain horizon, then depending on the size of the deficit, your salary as a politician is going to be reduced.
That's
this is incentives. This is so I'm not suggesting that this is the only way of doing it, but we certainly need strong incentives. And a very important thing related to that is to educate the voters. I mean, the politicians are really just reflecting the preferences of the society, and what happened in Portugal, where the parliament kind of threw out of the table the proposed reforms, just shows you that we first need to convince voters that the situation is really serious and something needs to be done to address it. And only then the politicians will have the courage to stand up and implement reforms.
But could you not also say that voters in many of these countries feel rightly betrayed? Voters in Greece feel betrayed because they are to endure measures that will not get their country out of trouble anyway. Germans feel betrayed because the rules were violated repeatedly. With the first rescue mechanism, they were told that it would be just temporary and limited. Now it was through the Euro Plus Pact made permanent and increased in volume. The Irish voters certainly feel betrayed. And the MEP from Ireland, I thought, had potent criticism that I hear a lot actually coming from Ireland, that it's also unfair and unjust. And I'm even wondering, in relation to what you just said, that it's important that the market can punish those that misbehave. Doesn't the rescue mechanism amount to an attempt to suspend that power of the market? And I heard one Irish economist commenting by saying that what this amounts to is like socialism for the rich, that you nationalize the losses and every individual Irish citizen, you know, is indebted to the, I don't know, the value of 15,000 euro or something like that, while the bank managers, of course, and banks themselves remain reasonably healthy. So is it a futile attempt to protect these key economic actors from the pressures of the free market? Another comment that an Irish economist made was that to have capitalism without bankruptcy is like having Catholicism without hell. It just doesn't work. You need it as a kind of force.
Well, certainly. I mean, there are economic reasons for not letting the big financial institutions to fail. The argument's called too big to fail, and the problem is that, you know, if there's an important institution that kind of linked to all these other subjects, then it would create havoc, and even healthy institutions would you know, be heading towards bankruptcy. So there is this argument, but to a large extent, I agree with you that, you know, the moral hazard that it creates in advance is probably something that we need to address. Now, when you mentioned the pain that the Irish voters as well as the Greek voters are facing, certainly some of the pain, you know, I think some have more right to for that feeling than others. I mean, I think Ireland's problems were very different from Greece's, and the argument he presented is very natural. If you think about it, you know, suppose you have a big organization like BHP Billiton, a private company, or, you know, or Coca-Cola in the United States. I mean, imagine if they do something that incurs large losses, and then basically all taxpayers are asked to contribute towards that, even if you never owned any shares of Coca-Cola. I mean, it kind of seems really strange. That's what really happened in Iceland, where the financial company pretty much led the country to a bankruptcy. So again, yeah, there is some pain, but some probably deserve it more than others. I mean, just to give you some examples about Greece, and I don't want to pick on Greece. I have many good Greek friends, but if you, I mean, have a guess, guys. If you take the average, the proportion of average pay in the public sector relative to the average pay in the private sector, and again, in most countries, private sector pays more, or maybe they're kind of on par. What do you think it is for Greece? Any ideas? Well, it's 2.5. So, you know, the dream of every Greek person is to get a job in the public sector, because obviously they can never get fired. They get, you know, the people in the parliament get 16 monthly salaries. You know, we have 12 months, but they get 16, and the last two are untaxed. You know, there's like the amount of teachers per one pupil in Greece is like 4 times of what it is in Finland, which has got some of the best, you know, educational system. You know, you can just continue on and on. There was this one little island where they discovered a school with 10 students with 40 full-time staff being paid, and, you know, driving taxis and so on, obviously, because they didn't have anything to do. You know, this is the thing. So obviously the Greek people now feeling the pain, but again, if you do this for that long, you know, you've enjoyed that benefit, you got used to something, and clearly that was just a myth, that was not sustainable, and now you know, someone has to pay the price.
But for me, the most worrying aspect of what you just described is that the problem that Greece or Greek people or Greek government or the incompetent Greek governments kind of created is now a European problem. So that goes back to my opening question, and that will be the last question from me, and I want to invite the students in the studio to ask more. But isn't that precisely illustrating why the fact that all these countries are bound together in one currency union makes these problems worse? In other words, if Greece had done what it did outside the Eurozone, it would have been mostly Greek problems to this day, and whatever European solidarity would have been shown, it might have helped Greece, etc. But there wouldn't have been any strong reasons for Germans to feel upset about what Greeks have done so far, and there wouldn't have been many reasons for Greeks to feel somehow exploited, oppressed, or badly treated by Germans. Even Great Britain is experiencing problems, but English people wouldn't think of Germany for being responsible for the problems. While for Greeks, increasingly, this is a kind of plausible explanation. The same applies to Irish people or Portuguese people. So would you not say that that is the political limitation?
I absolutely agree. I mean, we didn't get to discuss more the disadvantages that were thought about before the Union, but one of the prerequisites is that the countries are kind of similar in many ways economically, and that they have similar kind of shocks that hit them. And in fact, the implicit assumption was that, you know, if we bind the countries through a common currency, this convergence is going to speed up. So everyone's going to be very similar, and that sort of thing will not happen. Now, there's in fact some limited evidence for this convergence to continue, but because of the fiscal excesses in many countries, that kind of really led to a divergence and all the problems we're facing now. So I totally agree. I think one of the implications is that that Europe will now very much more closely monitor who they're going to let in the Eurozone and who they're going to not let in. It'll be interesting to see how they treat all the kind of countries that are knocking on the door. But yeah, this is one thing we've learned. We really need a kind of countries that are more similar. And again, you know, they might be similar, but we also need to have incentives in place so that they also behave in a responsible manner, and rather than what we've seen over the last decade.